Welcome back to the Commercial Real Estate Show. I'm Michael Ball. Our topic today is senior housing. Please welcome my next guest. It's Stephanie Anderson. She's principal with Silverstone Healthcare Real Estate. They're headquartered in D.C. So, we talked to a couple economists, analysts. So now we're going to talk to a principal who's been in the business for quite some time. She has acquired 6 properties since May of last year at Silverstone. Also, her prior experience includes $7 billion of acquisitions and overseeing $20 billion of properties at healthcare REIT. Previous to that, she was a managing director at GE Capital Healthcare Finance. Stephanie, thanks for joining us today.
Thank you, Michael. I appreciate the time.
Well, we appreciate you being on and give us a little perspective from an industry participant's perspective. And to get us started, how did you end up in this specialty? Were you drawn to it in some way?
Well, I've always been a really good shopper. I used to buy planes for Delta and bought some satellites and rail cars, and ended up in commercial real estate, buying CBD office in Atlanta, the Atlanta Financial Center, Buckhead Plaza, and some in Chicago, 333 West Wacker for an offshore reinsurance company. And then started doing some hotels, Boston Back Bay Marriott and the Westin. And my grandmother passed away, and the other one was needing to find a home someplace, and the fear that she had in going into a very nice seniors housing community kind of led me to do a lot more research in that. And it's kind of has all the same drivers that commercial real estate has, on the upside and the leverage and the tax benefits, while also having some of the operational characteristics that hotels have, where you have, hotels, you have about probably 5 touches each time someone checks in, when they use the telephone to order room service, things like that. And so that increases the complexity of the business model. And then in seniors housing, you even have more touches, so more opportunities for success. And I liked all of that, where you could really drive the NOI by being successful and focusing on the resident, providing care, and you could make money, a lot of money, also by making the world a better place for seniors who a lot of times get forgotten. So that was kind of really what drew me into seniors housing versus commercial real estate. It's a little nicer, sweeter, more of a niche industry where most people actually do want to do well at the same time that they're doing good.
Yeah, well, that's interesting. Opportunities for more customer interaction and therefore being able to kind of stand above the rest. So tell us about Silverstone. So you started Silverstone a little over a year ago. You've been pretty active. What is your model there, and what types of properties are you continuing to look to acquire?
We have acquired existing properties. We're not as much into development. A lot of people are really on the development bandwagon right now just due to the aging of America. We have chosen to buy more recently built properties. Our portfolio has had properties built between 2008 to 2013 to date. And so those that are well stabilized, doing well, but are from more local and regional managers, and converting those to more national management, making them more of an institutional portfolio play versus a one-off operator.
Okay.
The capital in the seniors marketplace is becoming more institutional in nature, and there's a consolidation going on. And so oftentimes those really great local operators who built it and operate it themselves kind of get lost in the shuffle. And that's what we're doing, is trying to filter out those, acquire them, and baby them a little bit, and just see what they'll do.
And are you using institutional capital partners?
Yes, we've been really lucky in the fact that as a majority women-owned business that we have access to very supportive core plus equity, as well as some opportunity fund equity with some of the same players. And we've been doing our debt mainly with on-balance sheet debt with BB&T, and it's really all we've needed so far. And we've also done some structures with preferred equity and with some public healthcare REITs. So we've been really lucky in our partners.
And we're short on the break, but what areas of the country are you looking?
We do nationally. We have 5 properties in the Arizona area. We have 2 in Colorado, 3 in Texas, and right now we have some under contract in the Northeast, New Jersey and Delaware, as well as the West, San Francisco Bay Area. So we're kind of all over.
Okay.
Just really looking for the best deal.
Right. Well, that's important. Well, we're just going to take a short break here, and stay tuned because we're going to get some tips for investors who might be interested in the senior housing market, and something that might surprise you. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us. Today we're talking about senior housing. My guest is Stephanie Anderson. She's a principal with Silverstone Healthcare Real Estate. They're headquartered in D.C. And Stephanie, I'd like to get some advice from you. If people that have maybe are not invested in this sector, what kind of advice would you give them?
I would say that they need to go with someone who has invested in it. We do not follow typical real estate cycles. We have a tendency to overbuild when the multifamily is not overbuilt, and we don't respond to economic pressures. So we're not counter-cyclical. We just really are not tied into the market at all. So it's important that you have as your investment partner someone who has been in the industry over the last 10 years, because we've been through all the various cycles.
Yeah, that's true. And how about interest rates? How much would rising interest rates impact your sector?
We are very lucky in the fact that we have basically subsidized debt from the government, similar to multifamily, which is not, you can't do an office or hotel because we have Fannie Mae and Freddie Mac. So although as long as those programs are still out there, the rising interest rates there'll be minimal impact. I believe we have a really good ability to continue on this, especially because our NOI growth is tied to inflation, and so as interest rates rise, so does our NOI usually.
Okay. And how are you finding the investment market out there right now, Stephanie? We've been very lucky in that we've been able to attach ourselves to relationship deals with other people that we've known for years in the market over the last 20 years. I've heard that it's very frothy. I've heard there's a lot of capital looking for deals and that they can't find them. We've been just really lucky in the fact that we have more than we can do. I think just due to the fact that we've been in the industry so long. Okay. I know you're hearing some things that some people are maybe not closing on transactions, that they get them under contract because maybe their prices are too high, the cap rates are too low.
Yeah, it's just an interesting thing that's only been happening in the last 3 months. There's been a lot of the more major experienced players, some healthcare REITs and some private equity funds that have been in the marketplace, and they've taken it all the way down to the end of due diligence and then made additional requests, basically changing the deal and walking away. So it does appear to be one where, in our industry, we're somewhat insulated from it historically, because a small industry is kind of like a small town. If you're known for not standing by what you say you're going to do, people won't do business with you. But our industry is expanding, and so as part of that expansion, you're getting a lot more froth, and people are playing more of the game. They're entering into a deal thinking that they can, buy it down or change it along the way. And the long-term industry players are often saying no and just walking away. So that's really unusual for seniors housing.
What's the one sentence answer to this question? What might surprise people about this sector?
That even during the worst economic downturn we have ever had, that the NOI continued to maintain and not decrease, even though occupancy fell.
That's a nice surprise. Well, Stephanie, Thanks for joining us. We appreciate you being on the show.
Thank you.
And we'll talk to you soon. And, what a great show. I think it's the senior housing market is very interesting. There's a lot to think about and a lot to talk about there. And be sure to join us next week. We'll go to the other end of the spectrum. We're going to talk about student housing. That's also been a market that's been kind of crazy and been very upbeat. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.